Welcome everyone, my name is Mike Hamilton from Trade the Easy Way, and I'm just doing a midweek review on the day of the 12th of April when we've got US inflation and US Fed minutes. So this market seems to think that interest rates have peaked and they will come off. That's the reason why this market is screaming high, and all pullbacks are bought. So since this is the Nasdaq, since we came out at the back end of last year, we have lifted up. This is a five-way move here. I've drawn two or three ways. We've done a pullback, and then we've got swept up again and sitting up at these highs. So if this is a bull flag, we need, hopefully we need to pull back to this support to lift us up into 13.5, back up to these last summer highs. If we end up closing underneath this level here on the Nasdaq, then hold on to your hats, because then this is potentially over, and we could wind up coming down. This time of year, cyclically, this market will continue potentially into May and June, potentially. At which point I think it will rest and need a decent pullback. So like I said, at the moment this market is not shortable unless we literally give up and start closing underneath that support. Dow is obviously very similar. Dow, you can see we're right up against this February resistance after a lovely move off of these March lows. March was incredibly bearish. We spent most of March just coming off of this February resistance and pulling back, and then late March, very early April, we find ourselves up here. So same story. If we have a significant close lower underneath that 33,760, in the futures market, that's 170 pips more. So in the futures market, this is about 950 up at this resistance point, pretty much where we are now. So let's have another look at other markets. Let's have a look at the FTSE. So the FTSE is screaming high. We've come right back into this drop zone. So we had a significant, there's a head and shoulders pattern. There's the neckline, or there's the neckline. Pulled right back into 50% of last year's move, and now we're sitting above last year's high. So same story, unless we look as if we can keep going up, potentially go back to 8,000, but if we turn around and close lower, significantly lower here, then this could all fall over and unwind back down to that support at least. Okay, so oil, ever since we gapped up, we just moved sideways. So and we look higher. So gaps like this could stay here for as long as the market wants it to stay there. Just because there's a gap doesn't mean to say it's going to get filled soon. It could take weeks or months to fill that gap. And all at the moment, so we're incredibly narrow range, so it's just don't touch gold oil at this stage. Gold is sitting right at this, it's a key juncture. It's a major day, isn't it? US inflation, Fed minutes, this is a major day. You can see we were up here in April 22 and dropped all the way back down to 16.15. So if we get if inflation looks as if it's coming off and we start closing underneath this 1980, then there's the neckline. That's going to tip back. In the meantime, this is very bullish. We're coming up on decent volume. We look as if we could go and find 2075. So I'd love to see a pullback another test of 1980 today if possible.